Okay, hello everyone. This is Rose from Brooks Price Action Team. Today is September 17, Tuesday, and it's the end of day. I'm going to go through the quick end of day review for those of you on Discord and YouTube, and talk about some of the bars where I would have bought, or I actually did buy, or sold and where the targets are. But let's take a look at the daily chart first. So I want to go through the weekly first. Okay, so the weekly chart is last week was a rejection and it closed really strongly below. So that's basically sign that the bull's probably gonna want to buy and test its high, maybe even get higher prices. So it's a buy signal bar. It's an inside bar, strong close. I'm talking about the last week. So this week started being, it's too early to say where the week is going to close, but it's doing what it's supposed to do. So it's looking for buyers. But the bears looking for a double top with the August high, and then which they have it, and they want to trap the bulls, and they want to sell again. So we have been in a trading range. Bulls have been strong, rejected the bears. Bears want to sell again, bring market down to here, at least to the moving average, and then close underneath and continue to sell. But the bulls see following higher prices probably want to have a new all-time high. We have a measured move target. I don't know if we can get there, but we might. So on the daily, I told everyone that yesterday's we're going to continue to buy. This day was a strong buy, and I said we're probably going to continue to buy. We're going to test this dash line, and we're going to test that 57.0125 is, and we did last 2 days. We kept testing, but we couldn't close above a bull day. And then today we actually opened up pretty high, gapped up, and I told everybody that in the morning today, 57.31 was the target. So I said if you do buy it, hold into that or the trend line test, and above the trend line we should be able to test. But it's a trend line test. There could be sellers there. Bears are trying to prevent bulls from getting above the August high, because if we start to close bull bars, we're definitely going to close this gap. But I kept telling people this gap right here is a problematic. This is where sellers are waiting, and you can see that we've already gotten a rejection there. But today closed on its mid-level, but still, is it all that bearish? Look at how many bull bars that we're selling against. Tomorrow is FOMC day, so we could go sideways, maybe a little bit low, maybe sideways, and then if the FOMC becomes very bullish, we'll make a new all-time high, and this is going to be my target. I've already measured it, so it's 58.1625. I'm on the December contract already, so that is the target. So I marked the 57.31, which was I think that was, let's see, yep, 31. So 57.31 was my target, and I was looking for bulls to continue to go up. So first bar, let's talk about that. But before I go is into the 5-minute deep dive, I want to talk about this Globex chart. Okay, so is pre-markets, I find my trading ranges, support and resistance, and Asia session into London had a major breakout, but we have been making these wedge tops. So 1, 2, 3, then count began again with this big bull bar in the US session, went up, so that's a micro wedge top in a way, and we started to come down. So the target is really this last bear bar low. So we're going to test this bear bar low, because breakout happened there. And we have a double top and a neckline right there. And we also have several rejections. So failure of a failure is a swing, and the bears started. I generally measure from here. I don't have to put my stop, but you can put your stop there, but the measurement is there. So these were my targets. So the 1R, 2R, 3R, and we can't seem to close below the 3R. 3R is right here. It doesn't look like it's there, but it's there. So, but really all you have to do if you start to see bears taking out these lows, you can also look for a measured move. This trading range is a tight balance zone. This is where the buy orders and the sell orders are balanced by the hedge funds and banks and whatnot, institutions. So generally I look for two rejections here if I want to see bulls actually buying again, maybe go back to 50% of the strong leg is or some key price, but we had that. So here's a big buy signal bar, and here is another one. It's a weak one, but they will buy, and they did. And I'm going to talk about that now. 5-minute charts, or but if I wanted to measure the measured move target, then there it is. Okay, so this was your measured move target, and we could not close below it. Consecutive bar, so now we take profit and reverse, and it's a really good place to bounce actually. But how did that all play out bar by bar on the 5-minute chart? The prior day is market is actually trapped the bears and kept going higher. It was a trading range day. We tested yesterday's high, and then we closed at the moving average. But I told everyone we're probably going to open up higher, and even if we opened here, we're going to go higher. So instead, at the pre-market is after hours, we were already going higher. But if we were to open here, I was committed to buy and look for a swing. Instead, we gapped up. So what happens is that when we gap up like this, okay, how do you trade this? You have to first sit around and wait to see if the bulls and the bears agree that this is a good price, so that they can actually start to mark up, mark up the contract prices. Now, what do you need? You need, even if you get a one bear bar, you want to see bull bars and you want the bear bar to be rejected, or you want to see good two high closing bull bars or the strong bull closes, then you can start to buy. And as we go sideways and up, and the EMA would catch up, and you can buy the first touch to the EMA. Now, things didn't really work out all that well. We had bar one closing on its low. Bulls were already buying. They bought the close. Look, bar one actually went up and then collapsed back down. So many bulls who were buying trapped there. So what are they going to do? They're going to buy from underneath bar one, and they brought the bar two and three where they actually bought, which was the open O bar one. And you can see that they are actually scalping and they're fixing their trade. And if there were no more bulls were in the market, we would have already tested the bar one high. So I kept telling people, if we don't see bulls and not able to test the bar one high and not able to make a double top, then those bulls will exit out of the market by fixing their trades with bar two and three, and it's going to come down. What about those that haven't fixed their trades? They're going to buy about 5 to 10 points lower from where they bought, which was bar two, right? And so you generally I look for about like a 5 points or so. So this went about 5 points and 2/4. So buying started around 5 points, and then they started to get back to where they got stuck, probably above bar two or the bar one open, and finally they closed a really good bar. So to me, right here, anyone who sold bar three thinking that this is a really good bar to sell, you might have gotten a scalp there, but you're going to be trapped, okay? So if you do get trapped, at this point, you're looking for maybe like a 18 bars, so that's for 16 bars from here, and 1, 2, 3, 4 bars from here, you're looking for an average price. So you're looking for a price to come down to this average price, and you're hoping that the bulls are going to show up there, and until they show up, you sell. But look what happened there. So bulls are already buying because they want to fix their trade. So now bulls started to buy a little earlier, but I want to show you something. It is also a strong area. So with the bar 1 and 2, when it gaps up like that, I take about 18 bars from here, and I take about the high of that bar. So what I'm looking for is pullback. Okay. I'm looking for a pullback to the, hold on, let me extreme left, so it will be cleaner. Okay, so I'm looking for a pullback, and this is my threshold, this green line. If we move below that, okay, that means we're going to be testing here. So buying could begin as early as there, and it could come down to here. Look, we have only one bar closing below that level, and then we just reverse right back up, and we closed above the threshold, a strong bull bar. So to me, above that bar, buyers are waiting. So I did. I can't seem to, hold on guys. I'm trying to put a, okay. I'm going to continue recording this session I left over earlier. I think I'm somehow cut off the video, so I'm going to stitch this part to the earlier video, and here is how it goes. So this is part 2. So basically I'm looking for a pullback. I'm looking for a wedge bottom, maybe 1, pullback 2. I'm looking for pullback with 6, and I'm looking for 7, 8 into the 50%. Originally I take about, my measurement for the trading range was from this low, is I'm taking about 18, 19 bars from here, and then new couple of bars from the new session, and I'm finding my average price point for bulls waiting to market to come down, and then they buy. But is when the wicks are too strong, they are too large, or too tall I should say, I generally exclude, and here's how I measure. This is it's body to body, not wick to wick. Okay, then here is if you actually apply the level, and this is the shallow pullback. Instead of the 50% pullback, you're getting is 1/3 pullback of the entire range, right? So 33% pullback down, and then the bulls are shown. We never close the bear bar below that. So this is how I knew that bulls are going to show up. Bulls are already stuck here. They're buying 5 points from below bar 2 because they probably bought above it. And they're buying to fix their trade. So we have a really nice, strong bull bar there. I'm going to have a buy arrow marker right there. So this was my entry, right? And I'm looking for, and I see that second leg and third leg failed, and the but what happened there? Look at that, bar 7 actually moved underneath 6, gave the bears who sold higher, maybe they sold underneath bar 1, sold higher, okay, and had a or maybe they sold underneath 4, underneath 3, or sold higher with the limit order. They were on their way down and looking for a third leg down. Now they're trapped. So what market does is it goes, it probably is, it opened here, came back down. If anybody sold somewhere here, and that's kind of difficult because only machines will do that. The retail traders are going to be stuck here, and you can see that this is trap right here. So if anybody, the reason why bar 7 is going here, smart machines or fast thinking machines will sell. And maybe they will sell the close because it's 2 bar overlapping. They're going to sell the close of bar 6, and they're going to be able to exit out of this trades. But the rest of the world is going to be trapped there, 7 moved, 1 tick under. And then bar 7 closing like that, everybody is trapped. So bears are looking for a reason to enter. They might start to sell from above bar 1 or 5 or 10 points. So here is about 5 points, right? Here's 5 points, the close of bar 10, they started to sell. So if you are a bear, maybe you sold underneath 1, maybe you sold underneath, or the close underneath 3, or you sold here and you're trapped. You sell again around 5 points, right? You get your break even. If you're quick about it, you will get your break even. That's your break even right there. And then market goes up. It exits all of those bears. But if the bears didn't sell because they didn't see a good sell signal bar, now they're going to sell about 10 points. Right here is 10 points. 10 points from above this bar, right? And they're going to look for, so if you're a bear, you sold there, you sold the close, and you brought the market down, but you can't seem to come down to where you sold, maybe even the close of 5. So, but you should have taken that chance. So that is a buy, and now we have a high one. You don't buy high one because sellers are there. Now you have high two, right? So many bulls will buy above this. They know that the bears are taking their chance and breaking, averaging their loss from here is somewhere here with the 13 and 14. And then they're exiting out of the market. Now you got a high two. Market is going to go test the highs. We go test a high. We had a ledge top there. Ledge top is consecutive three tops minimum. Now that's not really consecutive, but you can consider that as a ledge top. We've tested that ledge top, and then now we're bring price back down. Now, if you're still long, I kept telling people that is we need to take a look at these wedges. So here was the first original trend line, and I had an alternative one, and I said either one is might be tested, but if we test one, not able to close above that trend line, we might actually end up getting bears because we do have a wedge top. So here is, think of this as a one big is bull body, right? That means you have first leg and a pullback and a second leg and a pullback and a third leg. So you have a wedge top, and this is the last leg starting point. When market gives you a good sell signal bar like bar 17, you can sell and it can come down to the starting point. So is maybe the 13 low, 13 close, but it would be 14 low that I would be targeting. Now, why would I take profit there instead of taking profit all the way down here or expect market to come down? Well, there's a gap here. There's a bull gap. Bulls bought pretty strong. That was a leg one, got a leg two. So when you reverse back down, this is a demand zone. It's a very strong zone that it's going to block the bears, and those bears will start taking profit. So I told everybody, if you are selling, try to take profit somewhere in that gap and expect a gap close failure, but we might actually test bar 5 high, which we did. So if you haven't taken any profit there, you're going to be trapped again. We have two bear bars here, very nice. So I want to add the sell. So the sell was underneath from 17. So that's what they did. They sold. Now here is something else, is how do you measure it, right? So if you sell underneath 17 with a stop there, right? Here is your 1R, is market is coming down. Now, it didn't reach the 2R and it bounced, but anyone who's selling disappointed probably is going to sell at the open or the high or the upper third. My thinking was mid and upper third of the strong second consecutive bear bar highs is we're going to get the sellers, but you have to allow bulls to push the market and give you some kind of a double top bear flag or wedge top. Now, if you go to the 2-minute chart or 1-minute chart, a smaller time frame, you can actually count. Here's a leg up, pull back, right? Here's a leg 2, pull back, leg 3. If that's not clear, then go to the 1-minute chart. But you'll be able to count right there, right? So it's leg up, pull back, bar 70 on the, oh, wait a minute. Am I counting the right place? Yeah. So wait, no, sorry. It's right here. So here's leg up, pull back where is the leg 2? Well, leg 2 could be that, and then we pulled back, right? Because we went above that bar's high briefly. That was the second entry long, but it failed. Comes down, and here is leg 3. So you got a wedge top there with an undershoot and an overshoot. And then mark, or you could say truncated wedge top. So up on this, down on this, up on this, down on this, up on this. Okay, so then you could say truncated wedge, and then bears will sell. I don't really trade the 3-minute chart, so I generally am on 5-minute. If I need to see things clear, I lower it down to 3 or 2-minute chart. So that is right there with a double top. You don't have to analyze it all that deep, but that is right there a double top bear flag. The only problem me continue to selling and taking profit with bar 18 was I didn't really trust bears because they could not close that bear bar below the moving average, and they couldn't sell further. So to me, there's a double top here, and then the neckline bar 14, they're not able to take that out. But the one thing that's happening, we have double bottom, double top, double bottom, double top, or double bottom. So we have failure of failure is a trend. And now I have a bear flag. Finally, I have a really good bar. Then my sell, I could sell there, or two, if you want to wait for a second bear bar, you can also sell underneath 25, but you can just simply sell, right? You would just scalp a little bit, continue. This time I'm looking for a swing target, and I have two bear bars. I am measuring from here for a maximize returns. So that's your sell. You can sell. I told everybody, don't buy anything here or expect market to get back up to here unless you start to see bulls closing and above the moving average with bull close. We never got that. We ended up having another small double top second entry short. So you could sell underneath 31. I sold here. I added to my sell. So this time I'm compounding. And I'm targeting the first, okay, which is right here, first target. But at this point now, we're actually taking down this right here, bar 5. We moved underneath bar 5 with bar 34 close. Market is continued to sell. So you can add here, right? Now you need to worry because we're closing this gap. We're testing a magnet high of yesterday, okay? That is the high of yesterday, bar 78. And we're not able to close bear bars. And the lower wicks started to get really large. But if you start to buy right here just because you see an inside bar, they could trap you. You're buying against 1, 2, 3, 4, 5 bear bars. So what does this mean? This means this probably wants to sell again, maybe the close or high of this bull bar, but they will sell. So now you have a strong move down and a one bar pullback and another bear bar. You can certainly start to sell again or add to your short. So by trailing your sell stop order from 35 to 36 to 37, and you would get filled underneath bar 37. One thing that I did there, this was a sell also. So bar 38 would trigger you into the short trade with another contract. Is you're targeting 1R and you get that 1R. Bar 39 close below it, so might as well sell another contract is right there, right? So at this time you're looking for some kind of maybe a measured move, and here's a measured move, right? I'm going to put my stop there. And that is the measured move right here. Okay, so that's your measured move bears. But how can we reverse here? If you look left, okay, we have trading ranges. There's a small trading range right there, right? It's the heart of it. Take that. You can even extend it like this. Right, and then there was another one where you broke that one. So I'm basing on this, and I'm looking for some kind of a bounce from there. But I'm looking for a second test. This is too strong for me to buy, but the bulls started to buy. Hold on, let me actually turn the connection on so we could get the rest of the data. Okay. Just waiting for chart to start showing. Let me see if I could do 5. We should get rest of the data in a second. Here we go. Okay. So all right, so we reached this area, which is area of interest for me. I want to buy from here. It's also the same area of interest that I have marked pre-market for everyone on Discord and TradeRoom. So if you are selling from here, here's your measured move target on a higher time frame, and you want market to come into this area. This is the balance zone. This is where the bulls and the bears, institutions is balancing their orders, okay? And this is an area where we go sideways. And when you have a trend like this, is if this isn't support, you want to see market bounce twice, is you can buy those signal bars, bull signal bars, but you're not going to go too far because it has to go into a trading range. That's the market cycle. You got a trend goes into a trading range before it reverses up or down. All right, so that was the measured move for bears. That was 1R and that's 2R. Okay, so for the failure of a failure swing, I got a 1R and I got my 2R. You got to wrap up this trade. You have to exit. You got the first entry long here. Is I did not buy above it because of the strong channel down here, 1, 2, 3, 4, and probably sellers above bar 41. I would look for a second entry long. And the second entry long, let me get that arrow, for me was above from here. So is what they've done is I bought above it, but first the market opened bar 45, is opened here, came back down, is just activated all the limit buy orders from under, and then went back up and activated my order from bar 44. One tick above 44, and then to close the bar. But it closed as bullish bar, so I put another order above 45. That one got activated with 46, bar 46, and then I let it go all the way up to the moving average, and then I took profit at the moving average because by then I have leg up, pullback is leg 2. So it's a two-legged reversal or two-legged pullback to the moving average, and probably sellers are waiting there. They're looking for some kind of a double top with that, but we also have a micro double top right there. So is micro double top, they're probably sellers. That's a good sell signal bar from the moving average. First sell for bears, and that's the second sell for bears. So you could have sold is right here underneath this bar, and you would look for 2 legs down to these lows. But because this is a buy zone and I'm looking for a second buy signal bar to swing this, I don't know if I'm going to be able to swing it all that well. I'm looking for at least 33% pullback, right? So here is the low of day, here is the high of day, and if I apply my pullback target, I'm looking for a 33% pullback, and that 33% pullback is right here. Market moved to the 33% pullback. I also bought right there. This bar was a good buy signal bar. It was just too big for my taste, but I can see the limit buyers are entering right here, and market is going and wanting to test that high. My whole thinking was, if I'm going to hold on to this, I want to see this resistance tested, okay? And I want to see bears show me a sell signal bar so that I can actually sell again from here. So I've got a double top. Now I have a wedge top. Bears want a bear flag, right? Maybe from here, 1, or you can even count from here, right? So give or take, maybe 1, 2, and 3. Now I got a really good second sell right there. So if you're still holding on to this, once I see bar 57, I'm going to exit because it could get another leg or 2 down. Now for bears, this is a really good sell signal bar. You could sell. Your stop, you should be putting above the resistance, right? Somewhere there. And then you should look for market to come back down here. One thing that the bears are failing to do is that they see a double top, they see a triple top, they might actually see a double top. Is one thing the bulls are failing to do is breakout. But they're also keep buying somewhere here. They consider this as support, which is a 1-hour EMA from the hourly chart. But something else is happening. You're in a trading range. If you're not aware that you are in a trading range, then you have to take a look at, you have to go back to the Brooks Price Action course and study it. Al talks about, and many times he has talked about in his recorded trading ranges. You can buy those recorded sessions from brookspriceaction.com and watch them. And Al will always point out that, I'm talking about Al Brooks himself, is that when the moving averages, the 1 hour EMA, or the 20 bar 5-minute EMA are going sideways, you are in a limit order market. You have to bet against the market. You're in a trading range. Okay. So that means I started to see, okay, bears are actually selling any good closes above the moving average, any good bull closes, such as bar 47. They're also buying any good bear closes below the moving average, such as bar 40 close and they bought it. Bar 51 close, they bought it. Why wouldn't a bar like 51 wouldn't sell further? That's because you're in a trading range. This is the low of the trading range. It's a bet against market. You're in a limit order market. So if they're buying here, that means I can hold it into the trading range, but then I'm going to be trapped there. I should be looking for good closes or failure with bull bars, maybe even 2 consecutive bull bars failing to get a breakout from above moving average. There it is. They sold again. There it is. They sold again. Right? Is here. They're selling because this is a bear flag. But this is the third time is market is testing. Okay, is market is testing right here the hourly 1 hour 20 bar EMA. That means this is support and we're going into the final hour, so there's not much time left. And I'm also seeing bulls having a 1 leg, 2 leg, and a 3rd leg. Bears getting a 1 leg, 2 leg. Maybe this is the 3rd leg, and there's a trading range here with, here is your trading range. Here is your 50%, and the bull bars are closing above 50%. So this means we're going to break out, but there's something else there. So at the end of the day on the Discord, I readjusted my resistance. Okay, this time I actually only measure the body. You can also measure from the high. So I measure bar 36, the bull body, the pause area. And then I said to everyone, let me get rid of this. I told everybody there is right here a triangle. Okay, or call it a trend line, whatever. Bears failing, they keep testing this trend line, but bears are failing to break it. Now we're bouncing. You got another bull signal bar that you can buy, and it's a 2nd entry, maybe even 3rd entry long. So you can count, maybe we made a new low, you can count from here, right? And then we come down here, maybe 1st entry, 2nd entry, 3rd entry, right? So trend line is holding. I would buy here. That's a small bull flag. Then I'm looking for another bull bar. And I said to everyone, expect, okay, the apex of the triangle or the trading range midpoint holding. Look for a good bull bar closing above the trend line. Bar 77 closed right there. I'm interested in buying again, and which I did. But I told everybody we're either going to test an overlap with the bar 36, or because it's the end of the day and we're below the high of yesterday and we're trading after 4 p.m., you should not be expecting, if it's not any earnings release time, you should not be expecting a breakout. So we're probably going to go test the high of yesterday, and you should be taking profit and you should be done with your trade. Market went sideways until bar 75. Bulls are buying. We are now closing above 75. We're probably going to go up. So you could also measure, if you entered there, stop goes 71. You should be taking profit 1 hour as soon as possible and wrap up your day. So basically, we have gapped up, and we briefly sold, and the direction was down, but it immediately reversed back up. Okay, so because 50% of the time, if market go in one direction, probably it's the wrong direction. So we went back up, and I counted how many times we pushed. 3 times we pushed. I'm looking for a wedge top, and then I'm looking for so many reversals. Look, we were up, we reversed is, look, we were, I'm sorry, we were down, we reversed up. So that's the first reversal. That's the second reversal for bears. Now the third reversal, the fourth reversal, the fifth reversal. Sometimes at the open you get 5 or more reversals before the swing sets up. Once I get the fifth reversal, so here is market coming down, 1, 2, 3, 4, 5. Now we're getting strong bear bars. Swing has started. This leg probably wants to get another leg, end up getting the third leg down, right? This leg probably wants to get another leg. So this was your swing after 5 or more reversals at the open. Market failed to go higher, and now we have a measured move, also target to the downside. So wedge top, trading range, and now projected down. Strong sell, climactic sell down with a vacuum test of the support, goes into market cycle, dictates that it should go into trading range. So we have traded several hours in a trading range with the end of day quick reversal into the resistance. Okay, so I will see you guys tomorrow, everyone, in the Brooks Price Action Trade Room. And tomorrow, Al Brooks is going to be in the trade room in the morning. I'll come in around 11:30 and take over from there, and I'll probably do the FOMC news trading in the afternoon. Okay, bye everyone. See you tomorrow.